Bonjour! Today we're going to have a look at profits. What we're going to do probably next week is we're probably going to have a webinar with the same groups that we had last week. So please expect that we'll have a webinar probably on Wednesday, if not Thursday, something like that. I'm going to obviously let you know in advance, and in that webinar we're going to go through every slide in detail of this new topic. And what else was I going to say? I'm going to also kind of start asking you guys to send me your notes, because I want to make sure that you're absolutely doing all the work that you're supposed to be doing from these videos as well. So that way we're just kind of sure that you're doing it. I just kind of want to motivate you a bit more, that's all. But yeah. So, 1 second. Okay, so if you could please write down the title, which is profits, and the date of today. And if you could have a look at the starter and begin to complete it. I'm going to go through it with you first, and then I'm going to give you, you should stop the video and try it out. Okay, so question 1. What are the total costs if total fixed costs are £20 and total variable costs are £15? Question number 2. What are total costs for a burger van if it sells 10 burgers per day? Per unit costs are buns 10p, meat 50p, cheese 5p. Fixed costs, on the other hand, are £50 per day. Question 3. What is the total revenue if every burger sells for £3? Remember that the burgers that you sell in one day are 10. So we're selling 10 burgers per day, and we know that the price is £3 for every single burger. Extension question here. What fixed and variable costs can you identify for a bar of dairy milk? What we're going to do is I'm going to give you the answers to these 3 in a second, and we'll probably just discuss this question here verbally when we do our webinar. Okay, so if you could now stop the video, please. And yeah, as per usual, I'm going to assume that you've done that, and yeah, I would like a picture of this actually, so please do this. Now, answers. So what are the total costs if total fixed costs are £20 and the total variable costs are £15? Of course, all we need to do here is £20 plus £15, and we get a total of 35 for our total costs. Okay, now question number 2. What are total costs for a burger van that sells £10 burgers per day? So we said that we knew that the buns cost us 10p per bun. Bits of meat are 50p per bit of meat, and we've got 5p per bit of cheese. Okay, so we also know that in total we're spending £50 every single day, so that's going to be our fixed cost. All we need to do here to find the total amount of costs is add 10p plus 50p plus 5p, and we get 65p, and times that by the number of burgers that we sell every single day, which is 10 burgers, and we get £6.50. Okay, once we get our total, this is our total variable cost. Okay, once we find our total variable cost, we add £50. Okay, so our total cost will be 50 plus 6.50, which is going to be 56.50. Okay, now question number 3, still pretty simple. We need to find the total revenue if every single burger sells at £3. When we said that the total number of burgers that we sell are £10, okay, so all we need to do is 10 times 3, which is the total cost, and we get a revenue of £30. Now, we're going to go back to this because I kind of want you to think about something. What do we notice here? We notice that our little van spends every single day this amount of money, but they only make this amount of money every day. So what we can see here is that we have a cost of 56.50 and a revenue of £30. This basically just means that I am spending, okay, more money than I'm actually making, which is kind of sad for this little burger van, because they're not actually making money. Because basically they're making money, but then they're going to have to spend all that money and even more extra bit of money on all the costs. Okay, so this is really, really important, because it's something that we're going to be thinking about in the future as well. Okay, so this is like a very important business concept that we're going to have to consider. Okay, so in order to make this a bit clearer, I've given you here a very kind of initial explanation of what the term break-even means. Okay, we're not going to look into it in that much detail today because we will be coming back to this, but I just want you to start thinking about this thing that we just talked about, okay? So the fact that we've got here a superior cost than what we're trying to make, okay? We've got a higher cost than what we're selling, okay? So revenue is smaller than our total amount of costs. So when a business is not selling enough units for revenue to cover costs, we are actually making a loss, okay? So in this scenario that we've just looked at, okay, of our burger van, they are not able to cover all their costs. So rather than making money, they're making a loss, okay? This is how we call it in business. Make sure that this is in your notes. And as more items are sold, the total revenue goes up and covers more of the costs. So this just basically means that if instead of selling 10 burgers per day, okay, making a revenue of £30, we start selling 20 burgers a day, okay, making therefore revenue of £60, then in that case there, okay, if I start selling more, so 20 rather than 10 burgers per day, in that case there, our total revenue is actually bigger than our costs, and that means that basically I will be able to make a bit of money and not to be in a state of loss, if that makes sense, okay? So we're just kind of having a look here at what the revenue is versus what our costs are, okay? And it's very intuitive to know, of course, that the more we sell our goods and services, the higher is the chance that we will actually be able to cover the business costs that we have to consider, okay? Now, I'm going to move on. So when we are in a situation in which total revenue is exactly the same, it exactly matches the total costs, and the business is not making, in that case there, the business is not making a profit or a loss. It is simply, we say that it is in a point called break even, okay? There's an extra full stop there that shouldn't be there, but basically what this means is that in a scenario in which, if we had here, our total costs 56.50, and let's imagine that instead the revenue here was also 56.50, okay? So fixed costs are identical, equal to our total revenue, okay? If these were together, then we would say that we have reached what business people called a break-even point, okay? In this case here, we're not making a loss, okay? Because we're not actually going under what we're selling, but we're not also making extra money because we have the exact same we have the exact same revenue, okay, as our costs. So we say that we're not making a profit and we're not making a loss, okay? Now, on the other hand, if the firm can sell at production levels above this point, okay, so if our revenue is 60 and our costs are 56.50, okay, so if this is higher than this, then in that case there, we are making what we call a profit, okay? So there are 3 different scenarios, okay? The first one is about the loss, just when costs are higher than revenue. The second is break even, when the revenue is identical to our costs. And the third is the profit scenario, in which we have higher revenue than our costs, okay? So this needs to be in your books, by the way. So establishing the break-even point allows a firm to plan the levels of production it needs to be profitable, okay? So please make sure that if you've got any questions, you're writing them down so we can discuss them in our webinar. But essentially, this is literally all you need to kind of start thinking about today, okay? So here, I just kind of wanted you to start thinking about what we've just learned here about break-even, loss and profit. So in this scenario that we've just had a look at, where we have higher costs than our revenue, what would you advise this poor little business that's not doing so well to do? Okay, so what would you, as a businesswoman, advise this company here? I'm going to give you a second in which you should be stopping the video again and writing down what you would advise. Okay, so I said here that, in my opinion, what this business really needs to start thinking about is to either sell more, okay, so sell more than just 10 burgers per day, try selling about 20, 30, 50, as many as possible, and they can probably do that by I don't know, maybe changing the location where their van is. Maybe they're situated in an area in London where there aren't that many people that like burgers, I don't know, or maybe start going a bit more, I don't know, maybe start advertising more or something, okay? Or what they could also do is cut their costs, particularly fixed costs, as I said here, okay? Because maybe they need to be a bit more careful with things like, I don't know, bills and stuff like that, okay? And in that case there, they would need to make sure they're not making a loss. Okay, so that's basically what you'd be doing. You'd either be thinking about selling more or cutting costs. It's up to you what, I mean, they're both completely correct, but it's up to you to decide what you would do in this case here. What I'm going to do now is I'm going to stop this video here because I don't want the videos to be too long, and I'm going to carry on with the lesson in the next video.